Hi, I'm Maiki Oreta and welcome to Business 360. Now first, the Philippine economy is slowing, investor confidence is shaky, and corruption allegations are raising hard questions about how our system really works and whether leadership alone can fix it. This morning, we're taking a hard look at these structural foundations. Okay, anyway, we're going to be taking a quick break. Business 360 will be right back. Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Fresh numbers are out. Philippine inflation slides to 1.5% in November. And we brace for impact. The Philippines enters 2026 on weak momentum as political rifts deepen and global demand softens. Global pressures mount. Trade tensions and disrupted shipping routes force the country to cut export targets through 2028. Investors hold their ground. Nearly 8 in 10 European firms in the Philippines expect trade and investment to grow over the next 4 years. In a budget showdown, the Senate advances a 6.8 trillion peso 2026 spending plan, cutting public works and unprogrammed funds. A new set of numbers is in and inflation continues to cool. Inflation in the country eased to 1.5% in November, down from 1.7% in October. This according to the Philippine Statistics Authority, or the PSA. The figure remains within the Bangko Sentral ng Pilipinas' forecast range of 1.1% to 1.9%. Prices for food, especially tomatoes and meat, along with home furnishings and appliances, helped keep inflation lower. This according to the PSA Assistant Secretary Divina Gracia del Prado. The Department of Economy, Planning and Development says it will continue implementing timely policies to keep prices stable and ensure progress is felt by every Filipino. The new warning signs are getting louder and they point to a softer 2026 for the Philippine economy. Both Nomura, a leading Japanese investment bank, and DBS Research, the analytics arm of DBS of Singapore, now see growth losing momentum next year. Nomura cuts its 2026 forecast to 5.3%, citing political uncertainty and slower government spending amid the corruption-related delays. DBS Research sees an even weaker path at 5% as fiscal expenditures slow. Typhoons disrupt output, and United States tariff risks weigh on exporters. DBS Research describes its outlook as a muddle-through scenario, meaning the economy grows but without real lift. No recession, but no strong recovery either. They expect more rate cuts from the Bangko Sentral ng Pilipinas, or BSP, to provide support, but say that the recovery remains fragile. A new data signal is emerging. The Philippine economy may be staging a fourth quarter rebound. Growth is expected to hit 5%, a pickup from the third quarter slowdown, but still short of the government's goals. This according to the Philippine Institute for Development Studies, or PIDS. A sharp drop in public construction plus ongoing corruption issues pulled third quarter GDP down to 4%, the slowest pace in 4 years. Full year 2025 growth is estimated at 5%, with 2026 projected at 5.3%. Both missed the government's targets of 5.5% to 6.5% for 2025 and 6 to 7% for 2026. PIDS warns that the economy can no longer rely on household spending or demographics alone. It says restoring public trust and accountability is now central to unlocking sustainable growth. Now, a major reset is underway. The Philippines slashes its export targets through 2028 as geopolitical tensions, new trade barriers, and disrupted shipping routes weigh on performance. Under the revised Export Development Plan, projections from this year through 2028 are now far below earlier estimates. Export officials say global headwinds and the country's heavy reliance on just a few key markets have held back growth, even as electronics and other sectors post modest recovery. They add that diversification, better market access, and stronger export-oriented investments are critical if the Philippines wants to keep up with regional competitors. Now, a new warning from the banking sector. The Philippine economy may slow sharply and stay weak until 2027 as the flood control scandal weighs on both public and private investment. This according to Deutsche Bank. The Bangko Sentral ng Pilipinas, or BSP, may cut rates again, though a 25 basis point hike is still possible before the end of the year. Deutsche Bank says there is room for an even deeper easing cycle through 2026. The peso could weaken further and may breach 60 pesos to the dollar next year if corporate sentiment continues to deteriorate. A meaningful recovery is expected later in 2026 as import demand eases and the current account deficit narrows. Amid the governance turbulence, there's a surprise bright spot. European companies are still betting on the Philippines. Nearly 8 in 10 European companies in the country expect trade and investment to grow over the next 4 years. A survey by the European Chamber of Commerce of the Philippines shows most firms also expect business to pick up within the next year, even as corruption issues slow government spending and weigh on confidence. Economic managers maintain the scandal's impact is temporary, though project pipelines and public works have already faced disruptions. An official from the Asian Development Bank says a recovery could be supported by monetary easing and a stronger services sector. But they warn that infrastructure spending must get back on track. The Philippine Senate has approved the 6.7 trillion peso 2026 budget on second reading. Lawmakers cut funds for the Department of Public Works and Highways. They also trimmed unprogrammed appropriations after public outcry over corruption allegations. The new budget is 7.4% higher than the 6.4 trillion peso 2025 budget. That's roughly 22% of the country's economic output. Unprogrammed appropriations dropped by 68.5 billion pesos from the House proposed 243 billion. Senators say that the move pushes for more transparent spending, but not everyone is on board. Senators Allen, Cayetano, and Joel Villanueva voted against it. They cited weak support for rural development and questionable allocations. The budget heads for third reading approval on December 9th. Bicameral conference meetings are set from December 11 to the 13th. The warning signs are hard to miss: slower growth, weaker investment, a public works slowdown, and corruption scandals that continue to undermine confidence. Forecasts from the Bangko Sentral, the OECD, and global banks now point to a softer 2026 with a muddle-through recovery at best. The question is no longer whether the economy is slowing, but whether our institutions are strong enough to turn it around. Joining us this morning is political economist Calixto Chiquiamco to help us understand whether this is a leadership problem or a systems problem, or both. Now, good morning, sir. Thank you for being here with us.
Good morning, Maiki.
Okay, so sir, we're seeing multiple red flags across the data. The BSP expects only 4 to 5% growth for 2025. The OECD sees the Philippines, growing below target for the next 3 years. Nomura and DBS also project a slow 2026. From your perspective, is this mainly a leadership problem, or are there much deeper structural issues?
Well, there are much deeper structural issues, both on the political and economic front. No, in the economic front, it's not just a matter of slowing GDP growth that we are seeing. The problem is really structural. If you look at it, our foundations are very fragile. We are deindustrializing. Manufacturing has shrunk to around only 15.9% of GDP, which is just slightly higher than Laos or Mongolia. Our agriculture productivity is very low. We're the lowest in Asia, and that's why food prices are high. So, and most of our GDP growth is really in services.
Yeah, it's a tough spot because politically, the president is on the defensive. That means he has to go with what's popular. Does he, in this, in this defensive mode, does he have the capacity to implement the unpopular but necessary reforms in a situation like this?
Well, I don't think he has the political capital right now to undertake the necessary reforms. The problem is what we're seeing here might be a downward spiral. Political instability causing slower growth, and slower growth causing more political instability. So it's a kind of reinforcing negative spiral that we might see.
Okay, the PSA just released inflation at 1.5%. What do you think this signals about the health of our economy today? I mean, inflation is in check, but our growth is weak.
Well, I think it's not just a matter of inflation. It's really an affordability problem. The cost of living remains high, So, and I think a survey showed that food prices remain a concern of Filipinos.
Yeah.
So,
yeah. It's an important number, but it really needs to be felt on the street. So
That's
even
right.
though inflation is in check, the cost of living is still high, so
That's right.
it might as well be high.
That's right. That's
Okay.
right. That's right.
Sir, I wanted to ask you, given the situation we're in today, the corruption scandals, the cabinet reshuffles, and perhaps even the resignation of the ICI's Babe Singson, do you think the president is firmly in control? How would you describe central authority today?
No, I don't think the president is in control. In fact, the latest survey showed that public dissatisfaction with him has been growing. So he has to be more proactive in solving both the corruption mess and also with respect to undertaking necessary economic reforms. But so far, we're not seeing that.
Yeah, you mentioned his approval rating. The approval rating of President Bongbong Marcos has dipped. Latest data shows that it's lower than Sara Duterte's right now. How crucial is this, and what does it mean that his approval ratings are down?
Well, for the economy, as I said, the problem is he will not have the political capital to push through all political reforms. Economic reforms. So that augurs, maybe further slowdown, further paralysis with respect to decision making.
Yeah, because the political instability leads to the economic downturn, and the economic downturn leads to even more political
That's
instability.
correct.
So it's a very vicious cycle. I wanted to ask your thoughts, sir. I wanted to focus on the resignation of Babe Singson from the ICI. What do you think it signals, and what does it mean from a governance and institutional credibility standpoint?
I think it signals the fact that the president is losing the narrative that he is sincere in trying to bring these responsible people to account for their crimes. I think Babe Singson has said that the ICI lacks the power to be able to bring all these people to justice.
Yun nga, sir. Bringing people to justice, accountability is what everybody is hungry for. But given that our problems in the country are structural, this penalty, with jail time, it's not going to be enough.
No.
What do we need, sir?
I think what we need is a constitutional change, both to revise the political and economic system under 1987 Constitution. So we need a strong political party system with state funding for political parties so as to minimize the corruption that we are seeing. Remember, this DPWA scandal is not the only corruption scandal that occurred. Even before with the PDF and President Estrada, there have been a lot of corruption scandals.
Yeah. Sir, what does this tell you about the state of corruption today? How deeply it's entrenched in the system? I mean, when you think about it, it costs about 300 million pesos at least to win a seat in Congress. I mean, who has the funds for this? I mean, does our system at present incentivize corruption?
Yes, I think our system incentivizes corruption precisely because it takes so much money to be able to campaign and keep your positions of power. That's why there is a need for a political party system instead of relying on your family to do collective action, and for the state to fund political parties, depending on their performance in the polls. So I think this is what is followed, the practice in other countries.
When can we implement this? When can we implement this constitutional change? And what are the changes specifically that you think would really help reduce corruption in the country?
Well, the one mode is through a constitutional assembly, but the Congress has lost all credibility in terms of reforms. So I think the other alternative really, and what I suggest is really elections toward a constitutional convention in 2028. We need to convene a constitutional convention to be able to make the necessary changes in the Constitution.
Yeah, that's right. You mentioned Congress does not have the credibility to convene as a constitutional assembly and effect the necessary changes. Even when we do this constitutional revision, sir, how do we protect ourselves from people that are after their own interest instead of the national interest, especially with, the elections forthcoming?
Well, of course, one is, of course, really oversight by the civil society when we have this constitutional convention. And there could be also rules as to who may run as candidates for the Constitutional Convention. I guess we can prevent multiple, families to try to control the elections for the Constitutional Convention.
And more importantly, sir, is the momentum for constitutional reform andyan ba? Do we have that momentum to make these kinds of massive changes?
Correct, because right now, all the institutions have lost credibility. Congress, the presidency, DBM, etc. So there is really a momentum to do a systemic overhaul of our political and economic system.
Yeah. And when you look at the landscape today, even the pinks and the yellows, they're batting for Marcos, which would have been unheard of. But they're batting for Marcos because they don't want to see Duterte come to power again. What are your thoughts on the political landscape as we head into 2026? Just briefly, sir, we're tight on time.
Well, it's very concerning because, as he said, the economic slowdown will feed on the political instability. So I don't know what will happen, but the alternative of a military takeover is going to be worse.
Yeah.
So we really have to persist to try to effect changes through the democratic means.
Absolutely. That would just really hurt our capital markets even more. And this political instability leads to economic downturns, which leads to more political instability. So we really have to find a solution to this. But anyway, that's all the time we have. Thank you so much for your time, sir. Political economist Calixto Chiquiamco.
Thank you for having me.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's take a look at how the United States and European markets closed overnight, as that sets the tone for trading here in Asia. The United States, over there, stocks finished mixed but mostly higher, with industrials, technology, and communication services leading the gains, while consumer staples, healthcare, and materials pulled back. The lift came after weekly jobless claims fell to 191,000, the lowest in more than 3 years, easing fears of a sharp slowdown in the United States' labor market. Over in Europe, markets closed higher as investors rotated into value stocks, with healthcare and financials leading that advance. Let's take a look at how markets in Asia are doing this Friday morning. Right now, the Nikkei 225 is well entrenched in negative territory, down by 1.4%. Hong Kong's Hang Seng Index down as well, not by as much, down by just 0.4%. Over in Shanghai, that composite is down by 0.1%. And in over in Singapore, the Straits Times Index is lower by 0.2%. Here at home, as of 10:23 this morning, the main gauge is bucking the downtrend in Asia. We're trading to the upside, higher by 0.3% to 59.06. Broader all shares index up by 0.2% to 34.63. Taking a look at these sub indices, all are trading well. We're looking at a mixed picture. We're seeing the holding firms, property and services counters in the green, whereas the financials, industrial and mining and oil counters are limiting the market's advance. Volume traded is at 302 million shares, valued at 1.13 billion pesos rather. Now advancers, we've got 60, decliners 52, and unchanged stocks 61. On the currency front, the peso opened at 59.12 to the dollar, down from its previous close of 59.02. Now onto the streaming wars. They're intensifying. Netflix emerges as the top bidder for Warner Brothers Discovery. The move could shake up the entire media landscape. Netflix offer is reportedly 85% cash, the highest bid among competitors. The plan, Netflix wants to acquire Warner Brothers Discovery Studios and streaming unit. This could mean a combined Netflix and HBO Max platform, potentially lowering costs for viewers. But Paramount's legal team is sounding the alarm. They question the fairness of the bidding process and are pushing Warner Brothers Discovery to set up an independent committee to review offers and safeguard stockholder interests. Now, as we close out the year, it's easy to get lost in the headlines, the challenges, the corruption probes, the market volatility. But through all of that, one question matters most. What keeps us rooted in the Philippines and what makes this country worth believing in? So I ask some of the country's top business leaders one simple question. What do you love about the Philippines? And throughout December on Business 360, we're sharing their answers. Let's take a look.
What I love about the Philippines? One word. Resilience. As a country and as a people, we've gone through a lot. Each disaster we face, be it typhoons, earthquakes, floods, COVID, we always come together to help, lend a hand, to encourage, to rebuild. When crisis strikes, political, financial, local, global, oftentimes beyond our control, we rise up, we show up, and we support each other. Where do we get our courage? Where do we draw our strength? How do we combat our fears? Survival and resilience. It's in our blood. Today we again face storms, both man-made and wrought by nature. How we stand in the face of these storms is what will keep us standing today and in the years to come. You know, there's a saying that a rising tide lifts all ships, but a changing tide tests the strength of your anchor. If our anchor is rooted in purpose, if it's rooted in love, we can always rise above our circumstances despite barriers, despite our fears, despite our challenges. And this is our story. This is the story of the Filipino. Be joyful in hope, says our Lord, faithful in prayer, patient in affliction. Christmas is a story of hope, and that hope is alive in the Philippines. A nation tested by storms, strengthened by faith, a nation worth believing in.
That was Beth Lee, the chairperson of the Federation of Philippine Industries, the country's largest group of manufacturers. And she's also one of the most respected voices in Philippine business. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.